It was hard to ignore SpaceX's IPO. It did make history after all. It raised 85 billion US dollars and went on to become a 2 trillion US dollar company almost overnight. So clearly, some IPOs can generate a lot of excitement and buzz and soaring share prices. But then there are those who struggle to stay above the IPO price in trading. So, how should retail investors think about IPOs? Should you jump on the next big listing or avoid the hype altogether? Welcome back to the Money Talks podcast. I'm Andrea Heng, and today we are going to unpack all of the hype behind IPOs and where investors should really look when the market is fixated on the next blockbuster listing. Joining me in the hot seat today is Brandon Ho. He's head of investment advisory at Arta Finance. Brandon, are you ready for this conversation?
I am very much so. Thank you for having me.
All right, you're welcome. Very good to have you on the show. IPOs. So obviously there are some that generate a lot of buzz and excitement. SpaceX is just one of many. But not every IPO has the same fate. Recently in Singapore, I'm reading this, Foundation Healthcare and Justco, the flexible workspace provider, they both ended their first trading day below their IPO price. Then over in the US, SpaceX blew up and became the biggest IPO in history, and we can't stop talking about it. Why do IPOs have such different outcomes?
Generally, what has been the consensus is that IPOs, on the first day, yes, they do pop about 20%, but after that, on the close of first day all the way to 3 years of trading, you do have an underperformance to the broad market of about 21%. And if you analyze that out, that turns out to be about 7% per annum. It may be why the differences between SpaceX versus the lesser-known IPOs is maybe because of the hype. It may be because a lot more people have been looking to get into this SpaceX IPO, so it drives up demand from there. Generally, larger cap IPOs also tend to keep their value a little bit better, and that underperformance is not as pronounced in larger cap IPOs, which is, of course, SpaceX is one of the largest out there.
Yeah, for sure. So then what separates the winners from the losers?
I think it's because of the hype. I think it's because of the amount of demand that people are looking to get. If you look at people on the street, my friends and my friend circles and clients that I've been talking to, they want to get into this SpaceX IPO, and it's a bit concerning how much demand they want to get in as well.
Okay.
So they were saying to me, I just want to get in regardless of the price. And that's not actually institutional investing. When institutions invest, they always look at a target price, and you only invest it if it meets those valuations. You don't get in regardless of the price. So that lack of price sensitivity there is a little bit concerning, but it does drive up demand. It does help prop up SpaceX's IPO price as well.
So can retail investors have access or learn how to be price sensitive like institutional investors?
Yes, you can. Definitely, you can learn. It just takes a little bit more steps, because what we see in retail investors is that they're a little bit more emotional. They're a little bit more subject to investor biases as well. You have things like FOMO, you have things like loss aversion taking over your decision-making process. But whereas these institutions are a little bit more structured and disciplined when it comes to investing. And I'm sure the listeners of CNA are very, very well versed with this. But generally, the broad population out there, retail investors, they tend to be more emotional. They tend to just rely on, what's the next big hype? So the big step is to take a step back, just to assess companies' fundamentals, know what you are getting into, understand the different business lines of each company that you are looking to get into, and then from that you can make a good decision whether to invest or not to invest.
So when you say institutional investors are data dependent, look at the historical data, what exactly do you mean? What exactly are you looking for?
Yeah, when you want to get into an IPO, especially when it's something as big as SpaceX, it's easy to get caught into the hype. It's easy to get caught into the FOMO and just jump onto the bandwagon. You need to exactly understand what SpaceX is doing. They, of course, have that space exploration business. that's not just one business line that they have. They do launch rockets. The second business line is, of course, their Starlink connectivity sort of play.
Yeah.
And actually, surprisingly, Starlink is the largest revenue driver of SpaceX. They account for about 60% of SpaceX's current revenue.
Yeah.
And then, of course, the last pillar that they have is XAI.
Right.
And they tap into that structural AI play there as well. So it's really different business lines, and it's good to understand what you have when you invest into these companies.
But just going back to the two Singapore IPOs that we just saw tanking a little bit below their IPO price at the end of the trading day, what happened there?
It's hard to say. Usually when companies IPO on the first day, you do see a pop of about 20%. That's US-based IPOs.
Yep.
Perhaps because Singapore market is a lot smaller as well, so you don't see the demand.
Right.
These
the
companies,
liquidity is not there.
The liquidity is not there.
Okay.
The demand is not as high. It depends who underwrote the IPO as well.
Okay.
And of course, that would affect the different prices that they IPO at, that IPO price, and investors thinking whether this IPO price is reasonable or not.
So it could be the person who set the expectation
Correct.
that really could make or break
The person
IPO
or the
first day
firm, yes.
performance. Okay, interesting. I did not know that. All right. So when large companies like SpaceX choose to IPO at this scale, right? Why should someone who may not have any intention of buying this in the first place care at all?
Because eventually now SpaceX is a public company. Even if you have zero intention of getting into SpaceX stock directly, you will if you hold broad US ETFs, you will eventually hold some portion of SpaceX in your portfolio. It depends which ETF you buy into. For example, the Nasdaq does have SpaceX already. If you're invested into QQQ, that's a Nasdaq focused ETF.
Yep.
SPY, S&P 500 ETFs, they don't have SpaceX currently in their stock.
Okay.
And the next reason why is always because once you hear about these huge mega IPOs, you tend to have what we call a substitution trade.
Okay.
What that means is because investors want to get into SpaceX, they need to fund it from somewhere.
Sure.
It's unlikely that they will get it from a pile of cash that's sitting under their pillow at home.
So it's not fresh funding.
It's not fresh funding. It's
Got it.
unlikely that they will be getting it from money market funds. It's likely that they will trade out of something into SpaceX.
So they might sell their holding in something else
Correct.
in order to fund their SpaceX share price purchase.
Correct, yes. So that substitution sort of comes in different forms. Maybe someone has a satellite sleeve of high growth, high tech, frontier AI names that they want to liquidate out from to get into this SpaceX IPO. Maybe they are very big believers of Elon and they want to shift out of that or shift between the two Elon trades because now you have an alternative, right?
Right.
Shift out into Tesla, into SpaceX. So it does really depend. It does depend on the relative comparison as well of these two companies.
So essentially, what I'm hearing from you is as long as I'm invested in an ETF that has that stock name that is going to IPO, it will matter.
It will
matter to my portfolio.
That's right.
So in the example of SpaceX, if SpaceX ends up in, it is in the NASDAQ now, and I have holdings in a NASDAQ ETF, that's going to affect my, ups and downs.
Yes. An ETF is still quite a broad range of investments. You have 100 stocks within the NASDAQ ETF, NASDAQ 100 index. It's not huge by any means. It's not going to take up 20% of your portfolio, for example. SpaceX is a large IPO, so it's going to be in the top 10 names.
Right.
But of course, you have that diversification there with that 100 stocks.
So that means there's quite a bit of pressure on SpaceX to keep NASDAQ customers happy, essentially.
The momentum going, yes.
All right. Okay. You were talking about friends and peers who were willing to just buy that SpaceX IPO at the time of launch, not knowing, whether it would do well. Let's talk about that group of people, right? They have pure faith that this IPO is going to do well and they're going to put their money behind it. And it's an individual stock. So what happens there? What risk are they putting themselves in?
If you're looking into single stock investing, idiosyncratic risk is going to be there. You have your company-specific risk. That's what idiosyncratic means. Systematic risk is more pertaining to the entire economy. So if you're going to be investing in a single company, idiosyncratic risk is still very much top of mind. That comes in whether you're investing in an IPO like SpaceX or whether you're investing in a company that is traded for decades along the exchange.
It doesn't matter.
It doesn't matter because the idiosyncratic risk is still there.
Okay.
You do have to look at historically what has happened when companies IPO. IPOs generally don't do as well as people expected, maybe because of the hype.
Yeah.
Larger IPOs like SpaceX does hold up its value relatively a little bit better versus the broad market. But if you're looking at risk specific to SpaceX, what we are hearing thus far is there's a little bit of governance risk that you have with Elon having 80% of the voting shares.
Yeah.
You do have, because SpaceX is essentially operating in quite a regulated space, right? You do have governments coming in, so that compliance, that governance risk is going to be still there as well. And then, of course, the competitors, it's evident. SpaceX has different competitors that are vying to push them off the podium for that top space exploration spot.
Yeah, and not to mention, we also hear of other big companies like OpenAI and Anthropic already keen to list and have an IPO either by the end of this year or early next year. And essentially, these are the same questions investors need to be asking themselves, because there will be hype behind these two upcoming IPOs plus so many others, right? So what's the misconception, the biggest misconception people tend to have when they hear phrases like the next $1 trillion IPO? I mean, it sounds sexy as a headline, but what are they not seeing past that headline?
Yeah, it's always tempting to get into these because you have attention-grabbing headlines.
Yeah.
Taking a note from my mentor when I was working at UBS, he always says, the biggest no-no is FOMO. So you don't just get into the stock because your friends are talking about it, because your neighbor asked if you've bought the stock, because you're seeing SpaceX listed in media and you're hearing about it in radio as well. It's always good to take a step back. It's always good to not lean into those investor biases. And retail investors, understandably, will be more subject to these investor biases as well. They don't have an investment committee sitting behind them like institutional investors do. And of course, it's important to remain disciplined as well. What you want to do, on the other hand, is to focus on what this company does. So SpaceX, I spoke about before, they do have space exploration, they do have Starlink, they do have XAI. And the synergies between these three is where the real sort of magic happens.
Okay, so I'm glad you talked about sectors, because I'm wondering if, IPOs within a specific sector tend to have more substance in a manner of speaking, a higher chance at winning. So a lot of the IPOs that we're seeing in the recent past involve tech. I'm wondering if there's a certain bias in the market for specific types of IPOs. Is there a pattern there?
What you're seeing so far is very evident. You see OpenAI, you see Anthropic coming to IPO soon. You see SpaceX already doing that. And if you take a step back and look at all these companies, they are operating in frontier tech, frontier AI as well. And generally, these companies do have very capital intensive needs. They do need huge amounts of funding before they're able to scale their businesses quite a bit. So the natural path after they have gone through this private market fundraising route is to access public markets, is to go out and IPO. So that's generally why you are seeing a lot more of these techie companies coming out into IPO.
It's kind of like flavor of the decade.
Correct, yes. It's also a structural growth within tech. That's why you're seeing a lot of these companies doing it now. Timing of it is also quite curious.
Tell me more.
There's a reason why companies choose IPO now. IPOs can be sort of seen as a thermometer.
Okay.
So what companies want to do is get the best bang for their buck, right?
Sure.
And if you're looking at if you're looking at markets now, what you're seeing is that they're consistently hitting new highs.
Yeah.
They are quite warm. The markets are quite warm. You see that growth trade in AI still very, very much evident. And what you want as a company is all these factors. This combination of factors make it very good to get a high valuation when you IPO.
Right.
So that's why IPOs, or the number of IPOs generally, is thought of as a barometer or a thermometer to how warm the economy is. And it's not to say that it's going to overheat and it's going to crash. Nobody has a crystal ball to tell that.
Sure.
But you know that the economy is booming along quite well.
Okay, thanks for that. That was a very interesting take of it. The timing is something to observe as a pattern. And I think it's also useful because basically what we're saying is it's not patterns for pattern's sake. There is always an underlying reason
Correct.
for these patterns to emerge in the
Correct.
first place, right? And it's not just flavor of the month for the sake of being flavor of the month. So this question is related to what you just spoke about how, there is talk of a bubble, whether the market will overheat, like you said, right? So is there a risk that some of these IPOs, and I think framing it in the SpaceX IPO is a useful one at this juncture, is there a risk that these IPOs become so big that they distort valuations and create a bubble around their related industries? And the AI bubble, the tech bubble, has been talked about for ages. But is there a risk that these large mega IPOs can create the situation, create the environment that's ripe for a burst?
Yes. Okay. So this question sort of takes two parts.
Sure.
There is valuations first, and then there's bubbles later.
Okay.
When investors get into SpaceX IPO, for example, you need to know that you are entering in at astronomical valuations, pardon the pun. You do have 94 times price to sales ratio. And what is driving that is, of course, at IPO date, SpaceX is valued at a $1.77 trillion company. And that's supported by $19 billion worth of sales. So that translates over to a 90 plus times price to sales ratio.
Okay.
You compare that against something that's a bit more developed, a bit more track record, something like an Apple that trades at closer to a 10 times price to sales ratio.
Oh, that's a huge difference.
So the dispersion there is quite big. You do need to understand that SpaceX right now is at quite a premium valuation. And there's always a risk that if investors do peg that valuation out to other growth stocks in the same sector, this very frontier AI, frontier tech kind of trade, that it gets translated over to those valuations as well. So there's always a risk that valuations get pushed up because a competitor is valued at so much.
Okay.
On the talk of bubbles,
Yes.
it's always tough to predict a bubble. Actually, a bubble is only evident in hindsight.
Yeah, of course.
Nobody knows whether it's overvalued right now. We've been, like what you pointed out, Andrea, we've been talking about bubbles for the last couple of years.
Yes.
Nobody knows when it will burst or when it will get pricked. The best thing for a retail investor to do is to position yourself the best. A retail investor does not have a crystal ball. They don't know what's going to happen in the next day, much less the next year. What you can do is protect yourself well. Proper diversification is key. Don't put, what I said before, 50% of your money into one SpaceX stock. Diversify out to assets of different sectors, different geographies, just so you have better risk-adjusted return from there. It's good if you can, for example, introduce bonds into your portfolio just to act as a balance against the more risky SpaceX stock or frontier AI stocks that you have.
Yeah, I think that's what the hype can sometimes do to an investor's brain, a retail investor's brain, is that you're overwhelmed with information of just this one company. You forget that, the fundamentals are there, the classic stuff is there. Look at your portfolio as a whole rather than just taking a look at, what this one company stock can do. And that's not to say it's not entirely wrong to have an already diversified portfolio, but wanting to invest in a single stock,
Correct.
Right? Okay, so say I do decide to buy into an IPO stock, and maybe I'm seeking your advice, or I'm heeding your advice and thinking to myself, okay, I won't buy now, I'll come back to it later. how much time should elapse ideally?
I think a decision to buy shouldn't be based on time.
Okay.
The decision to buy is very much dependent on, and I'm tapping on institutional ways to invest as well,
Sure.
is you do have a stock price and you do have a valuation at that stock price. And that's what they determine whether it's a buy, a sell, or a hold. If you're trading within a specific range, it's good to hold because nobody ultimately will know what happens tomorrow. There is a range that is going to be rated at a hold, and that's they're comfortable. So institutions will be comfortable holding onto the stock at that point. If that target price, what we call target price, is going to be a lot higher than what it is trading now,
Right.
that's when you see a good buying opportunity. That's when you should be getting into the stock in a relatively short time.
Okay.
If you see your target price being below that current price, then you know, okay, based on your valuations, based on your models, it's probably not going to fulfill the expectations that people have put on it. So maybe it's a good time to cut position in that stock.
Okay, so it's price watching, not
Correct.
time watching.
Correct.
Okay. How long does it take for a newly IPO'd stock to make it into an ETF?
It does depend on the ETF.
Okay. How so?
So for example, it's already been included in the NASDAQ 100.
Yeah.
They've elected to take a slightly more lenient approach and to fast track SpaceX's inclusion into the index.
Yep.
S&P, on the other hand, the two biggest, I'm using the two biggest US ETFs or indices as comparison. S&P does have more hoops to jump through.
Yep.
S&P has elected not to fast track SpaceX into its index, just because it typically does need a 12-month trading history, just because it does have things like disclosures and things like profitability requirements before inclusion as well.
I see.
If you're looking at more global indices, MSCI, MSCI also has a fast track process, but they've chosen not to do so for SpaceX. Okay. So the only ETFs that hold SpaceX now is going to be NASDAQ, it's going to be Russell as well.
Okay, Brandon, you have prepped us quite well, especially with OpenAI and Anthropic going to be the next big listings to watch out for. You've given us quite a bit of advice in how to think and approach IPO. So thank you for sitting in the hot seat today.
No problem. Happy to be here.
And thank you to our Money Talks community as well for tuning in. I want to hear from you now. Has the news of mega IPOs on the horizon made you rethink your portfolio? Are you quivering under the pressure of FOMO? Or are you team, nope, FOMO is a no-no, just like Brandon's ex-boss once said to him? Let me know in the comments on whichever platform you're listening to us from. You can also email us directly, cnapodcasts@mediacorp.com.sg. This has been the Money Talks podcast. I'm Andrea Heng.